If Bitcoin hit $110,000 and you think you missed it, here's a reality check. Hal Finney, the first person to ever receive Bitcoin, calculated back in 2009 that each coin could eventually be worth $10 million. Not a typo, $10 million per coin. And here's the plot twist that'll blow your mind. Based on current wealth distribution and adoption rates, we're not at the end of Bitcoin's growth story. We're barely past the opening credits. Quick disclaimer. This is purely educational content, not financial advice. Do your own research and never invest more than you can afford to lose. Look, I get it. You saw Bitcoin at $1,000, didn't buy. Saw it at $10,000, didn't buy. Now it's six figures and you're convinced the ship has sailed while you were busy binge-watching crypto scam documentaries on Netflix. But what if I told you that literally all the math suggests we're still stupidly early? Let me show you 5 pieces of proof that'll completely change how you think about Bitcoin's price. Here's something wild. The total wealth of every human, government, and corporation on Earth is roughly $1.6 quadrillion. That's with a Q. Try writing that number out. You'll get carpal tunnel. Let me break this down with something visual. Imagine every $1 trillion of global wealth as a single marble. Real estate? That's 330 marbles. Global bonds? 400 marbles. Stocks? 100 marbles. Gold, the thing people have trusted for 5,000 years, only 20 marbles. Now here's where it gets interesting. Bitcoin, after 15 years of existence, has convinced just 2 marbles of global wealth to flow into it. 2 out of 1,600. But here's the question everyone's asking. Why would any more marbles move over to Bitcoin? And that's where the story gets fascinating. Every single marble in that global wealth pile is in constant competition with every other marble. It's like financial musical chairs, except BlackRock is charging you rent just to play the game. Stock bros want you to sell your house to buy more index funds. Real estate agents want you to liquidate your gold for more granite countertops. Gold bugs want you to cash out your 401k to buy shiny rocks. But Bitcoin does something none of those assets can do. It actually works like money. I can send fractions of it across the planet instantly. I can exchange it privately like cash. I can store unlimited amounts in 12 words memorized in my head. Try doing that with real estate. Hey, can you memorize my condo and teleport it to Tokyo? Good luck with that. Okay, but that's just theory. Where's the actual proof that wealth is moving into Bitcoin right now? BlackRock's Bitcoin ETF became the fastest growing ETF in history. Not one of the fastest, the fastest. The same Wall Street titans who called Bitcoin a scam for a decade are now racing each other to accumulate as much as possible. Bhutan, a tiny country most Americans couldn't find on a map, secretly mined Bitcoin for years. It's now worth a third of their entire GDP. An entire nation's economic strategy betting on Bitcoin. 62% of millennials want Bitcoin in their portfolio. Only 14% of boomers do. And here's the uncomfortable truth about that gap. Inheritance runs on a fixed schedule. The largest wealth transfer in human history is happening over the next 20 years, and it's moving to people who actually understand Bitcoin. And if you're thinking, okay, but surely the price can't go much higher from here, buckle up, because the math is about to get absolutely wild. Let's run the actual numbers on where Bitcoin's price could realistically go. If just 10 more of those 1,600 marbles flow into Bitcoin over the next decade, representing less than 1% of global wealth reallocating, Bitcoin hits $1.2 million per coin. That's not moonshot hopium. That's basic division. And we're not talking about Bitcoin needing to convince everyone. Just small portfolio reallocations from trillions sitting in low-yield bonds, overpriced real estate, and negative real yield savings accounts. When gold went up 50% this year, that wealth came from somewhere. Probably boring government bonds. Bitcoin doesn't need to replace everything. It just needs to be a better option than some of the alternatives. And compared to bonds yielding 3% while inflation runs at 6%, not a high bar. But here's where most people get stuck. They see the current price and freeze up. Americans are sitting on $1.1 trillion in credit card debt right now. Over 25% of Gen Z is buying groceries with buy now, pay later apps. 43% of millennials say they'd rather adopt a dog than have kids because of financial stress. The excuse of Bitcoin's too expensive isn't about Bitcoin, it's about people being financially trapped by a system designed to keep them broke. Getting a pet is $800. IVF at 40 is $15,000. People are making choices based on immediate costs while ignoring long-term opportunities. And here's the thing that should terrify you. Bitcoin is the first major asset in nearly a century that wasn't front-run by Wall Street. The first users were basement coders buying video game skins and pizza. If anything, Wall Street is late to this party. Which brings us to the uncomfortable reality nobody wants to talk about. Over the next few years, you're getting Bitcoin exposure through your 401k, your pension, your government's treasury reserves. The only question is, do you want to own it on your terms or Wall Street's terms? When you own Bitcoin through an ETF, you own an IOU. When exchanges collapse, and they will, your Bitcoin disappears. When governments decide to implement capital controls, and they might, your exchange-held Bitcoin gets frozen. But when you own actual Bitcoin in self-custody, you own an asset that no bank, government, or corporation can confiscate, freeze, or inflate away. You can cross borders with your wealth memorized as 12 words. Try doing that with a brokerage account. So here's the final piece of proof that ties everything together. The creation of an entirely new asset class is a once-in-a-century event. The internet, the automobile, electricity. These shifts don't happen often, and when they do, most people watch from the sidelines until it's painfully obvious. Most of the world hasn't allocated even 1% of their portfolio to Bitcoin. When that number hits 5%, the math we just discussed isn't theoretical anymore, it's inevitable. But early doesn't mean easy. It means the responsibility is on you to understand what's happening, make informed decisions, and take action before the train leaves the station. So, is it too late to buy Bitcoin? The math says absolutely not. The data says we're just getting started. The wealth relocation hasn't even begun in earnest. But here's what separates people who benefit from this shift versus people who watch it happen. Action. Not blind action, informed action. Understanding what you're buying, why it matters, and how to store it properly. If this breakdown showed you that too late is a psychological trap, not a mathematical reality, smash that like button and subscribe because I break down complex finance topics that mainstream media gets intentionally wrong. Drop a comment. What's your biggest mental block about Bitcoin's price? Is it the six-figure sticker shock? Fear of buying the top? Or something else? Because I guarantee someone else in the comments had the same fear and pushed through it. The rice hasn't moved yet. The marbles are still sitting in their old piles. The train hasn't left the station, but it's warming up and the departure time is approaching. The question isn't whether Bitcoin will continue growing. The math strongly suggests it will. The question is whether you'll be positioned to benefit from that growth, or whether you'll be kicking yourself in 5 years saying, I knew about this when it was only $110,000. Your move.